Jussi Salovaara, and I'm the co-founder of Antler and the managing partner for Asia. We are coming to you from Singapore, and to all of our founders, investors, partners, and community, welcome to the Antler Southeast Asia Demo Day. Antler is a global venture capital firm enabling and investing in the world's most exceptional people, building the defining companies of tomorrow. We do this through our global early-stage investment platform. Currently, Antler is located in 23 major startup ecosystems across 6 continents. Since launching in our headquarters in Singapore in 2018, we have invested in more than 400 companies in over 30 industries globally. Despite the current global geopolitical unrest and challenging macroeconomic environment, we could not be more excited for what the future holds. We have recently committed to investing $100 million in early-stage startups over the coming years in the Southeast Asian region alone. Southeast Asia is a breeding ground for innovative startups, and we want to give exceptional founders the investment, support, and expertise they need to realize their visions from the earliest stages. It is our ambition to help unlock and accelerate technological innovation in the region, and we are excited about the positive impact the founders we enable and invest in will create over the coming decade. Tonight, you're going to hear from founders of the newest additions to our Southeast Asia portfolio, Pitch. These exceptional teams have built their startups for the needs of organizations and consumers in an increasingly digital world where work, social interaction, and business processes are ever evolving. After each pitch, please click on the Get in Touch button for the startup you would like to connect with. You can provide feedback, express your interest in investing, collaborating, or becoming their next customer. Once again, welcome and enjoy the show.
Hi, I'm Lance, and together with my co-founder Lena, we want to build a world that has zero plastic pollution by making the trading of recycled plastics better. But doesn't that sound like something a social enterprise or NGO should be doing instead of a high-growth company backed by venture capital? In fact, the converse is true. There is no better time to be in the recycled plastics business than now. Global brands such as Nestle, Coca-Cola, and Pepsi have committed to substantial targets to use more recycled content in their plastic needs by 2025 due to regulatory and consumer pressures. This has created an inelastic and rising demand for recycled plastics. As a result, the industry is projected to grow at high double-digit rates for the next 3 years. Because of this, the recycled plastics market is expected to triple in value during this decade and hit $109 billion by 2030. Scrap is focused on the most commonly traded types of plastics, and by 2025, if we achieve just 5% of our addressable market, our turnover could reach US $2.9 billion. But why us, and how do we intend to do this? Well, today when a plastic recycler operates, he has to tackle several painful issues outside of production. First, good quality scrap plastic is very hard to find and increasingly difficult to import. Second, even if he found the feedstock he needs, scams are quite prevalent in this industry, especially on online marketplaces. Furthermore, the industry is highly fragmented and lacks standardization and scale, so he often has to go through several layers of middlemen and brokers. Finally, even if he successfully produces, he has to contend with a very volatile and opaque market when he sells his product. To tackle these pain points, Scrap combined technology, data, and human expertise to develop our solutions. We created an app-based trading platform where we curated a list of buyers and sellers from established companies with good reputations to become our market participants. Since launching our beta version in December 2021, we have already matched over $1.3 million in deals for our users. In this pilot phase, our early adopters love the safe and user-friendly platform that we've created for them. In the next stage, we will kick off our revenue model by becoming an alpha trader within the industry. We will source and supply high-quality scrap plastic to recyclers and help them sell the products at fixed prices so that they can focus on what they do best, production. Our business model will also help them to weed out unnecessary middlemen and having to deal with import-export regulations. Our team has the right experience to do this, and we have advisors who are influential veterans in this industry. In fact, our vision has also already attracted other professionals who would like to join us soon. Over the next 3 years, we want to become a major supplier for recycled plastics by engaging in forward contracts with manufacturers. Based on research published by KPMG and our experience within the industry, we expect to make between 5 to 20% in profits using this business model, which, if all goes according to plan, will enable us to hit a top line of $1 billion in 3 years and an EBITDA of at least $50 million. We would like to raise a seed round for talent acquisition and working capital, and we hope to attract investors who can also help us with their experience and network. This is a once-in-a-lifetime opportunity to build a great company in a very nascent industry with high growth and inelastic demand. Along the way, we will also be able to make very real impact in some of the biggest environmental and social problems that mankind faces. Our team is committed to making this happen. Please contact us if you'd like to join us on this journey. Thank you.
Hi, I'm Umang, a co-founder at Solidgate. Solidgate is Asia's first user-owned freelancer platform built on Web3, the next iteration of Internet. Let me give you some context about us before I jump into it. We are a team of domain experts and second-time founders in talent tech space, all from different parts of the world, yet united by our common disdain for one of the most irritating aspects of talent hiring, that is, dealing with the middleman. Most contemporary platforms charge exorbitant fee from freelancers or clients, and actually in most instances from both. What's even worse is the terms and conditions or even the fee structures of these platforms can change at any time, and there's nothing much anyone can do about it. That is how most Web2 business models are, extractive and margins focused. Which is why we are building Solidgate, a freelancing ecosystem that enables direct people-to-people collaboration, dialing down the middleman role and creating win-win situation for all. Freelancers pay nothing, while clients pay a 10% markup on each payment made to the freelancer in fiat money. This markup is used to drive growth, quality, and sustainability of the platform using our platform-native Solidgate tokens. Let me elaborate. Clients get access to pre-vetted expert talent within days rather than waiting months to hire this talent. All this while paying a basic 10% markup that is invested back into the ecosystem as Solidgate tokens. Freelancers, on the meanwhile, can earn these tokens by making contributions to support the growth and quality of the ecosystem. These include pre-vetting skills of incoming talent, referring clients or other freelancers, or simply getting a 5-star rating. Earning these tokens entitle freelancers to platform ownership, decision-making rights, and for the first time ever, grant them employee-like benefits such as health insurance and workations. These tokens enable freelancers to not just be a part of the ecosystem, they make them its contributing owners. So as you can see, it's the Solidgate tokens that are enabling this ecosystem to be truly community-owned. More than 50% of our token supply is reserved for our community, with 20% of the token supply open to investors. Now, this might sound a bit complicated at the back end, but people interacting with the platform will have a simple, seamless experience. Companies simply post a proposal to receive bids from top pre-vetted talent within days. Talent, on the other hand, can simply bid on relevant jobs while earning tokens on the contribution tab of their dashboard. Now, about the market, we believe we have a tremendous opportunity at hand to capture a significant portion of this 10.7 billion market in the next 5 to 6 years. We have one key competitor completely focused on North America and has raised 100 million last year. And we are building Solidgate to capture the Asia Pacific region as quickly as possible. We have entered the market focused on Web3 talent and companies in Singapore and ASEAN countries. and have a community of 50 plus top blockchain Web3 experts, many of whom are being currently interviewed by our early clients. Over the next 12 months, we intend to capture the Web3 space specifically with an MVP launch just a few weeks from now. Our next horizons of growth will focus on expanding industry focus beyond Web3, consolidating platform services and partnerships, and of course, aggressive global growth. We are at the dawn of revolutionizing freelancing in Asia by bringing mainstream utility into Web3 ecosystem. Crypto hype time might be over, but utility begins now. Now, whether you're interested as a Web3 investor, freelancer, or a company that's looking to hire talent, please feel free to reach out to us at this address. Thank you.
Hi everyone, my name is Dina Ruslan and I'm CEO and founder at Codify LMS. Codify LMS is a single tool which helps you to automate small to medium-sized education centers all over the globe. But before talking about Codify LMS, let me share a little bit about my past. I used to run one of the biggest IT academies in Central Asia called Codify Academy. We were teaching coding in different IT professions, over 400 students on a daily basis, and those numbers were growing every day. But our academy was shut down just in a single day on March 25th, 2020, when the government shut down all in-person courses. And that day, our world turned upside down. Why? Because I simply didn't know if my business, my academy, will survive in the COVID and post-COVID era. That was the time when we decided that even due to COVID, even if we cannot teach offline courses, we will go to the online format. But when we switched to online format, we faced several problems, starting with how we're going to conduct online classes, how we're going to check homework, how we're going to collect payments. But most important question, can we keep scaling our business in post-COVID era? That was the time when I decided to come up with an amazing solution which helped us to survive the COVID and post-COVID era. The Codify LMS allowed us to bundle all the features from CRM system and LMS system in the single solution, which allowed us to track the sales funnel, clients data, personal rooms for teacher and students, analytics, statistics, but most importantly, we have built in gamification features, training schedules, study plan, assignments, and so on. This allowed us to not just survive in post-COVID era, but actually scale our business in the blended and online format of teaching. That was the time when we realized that not only our education organization is going through these problems, that all other thousands and thousands of education centers are facing similar problems. That's why we came up with a very simple business model, the monthly subscription plan with the basic business and premium plans, so each and every education can choose whichever the plan fits them the best. Our target audience started from language courses and slowly moved to all types of education centers. Our sales channel started with the direct sales force brand building events, but slowly we added digital targeted ads. Our market size is growing on a daily basis because all developing countries, including Central Asia countries, have thousands of education centers teaching English, coding, and so on. So far, we did an amazing job by onboarding over 46 B2B clients all over Central Asia, and those numbers are growing. Our competition is obviously there. We have Russian-based products such as Yandex Class and Get Courses, but due to political situation, they are leaving the market, so we have a huge opportunity to take over that market. Also, there are tools such as Moodle and edX, but those are very old school LMS systems designed only for universities. So again, we have a huge competition advantage to take over entire LMS market. Our market validation is extensive. We have conducted over 200 offline demo meetings, over 2,000 calls, and 5 events. And everyone who saw the product, they loved it. Codify LMS in numbers is extensive. We have over 11,000 active students and over 1,000 teachers using the system. Our founding team has experience not only building B2B products, but also teaching at Codify Academy. Our expansion plan is to slowly scale to post-Soviet Union space and expand to Pacific Asia countries. That's why we're looking to raise the seed round for the 18 months to fully onboard Central Asia market and scale to Pacific Asia countries. So let's change the teaching process together, and feel free to reach out to me if you're interested to find out more about our product. Thank you so much.
Hi everyone, my name is Dinesh, and together with my co-founders Ethan and Harsh, we are shaping the future of wholesale procurement for restaurant operators. I'm sure many of you know who this is, and for those who don't, it's Gordon Ramsay. And this is the stress one of the top restaurateurs in the world has when it comes to running a restaurant and managing a kitchen. Now, think about the countless number of smaller, independent restaurant owners with less resources and experience. With the boom in online ordering in the recent years, millions of restaurant operators like Nobel had to invest both time and money in setting up digital infrastructures. This has pushed restaurants to adopt digital solutions at an unprecedented level globally. And now, with the ongoing rise in food costs and raw materials, restaurants are always looking for ways to minimize costs on their inventory. Since starting this journey 2 months ago, the one question we kept getting was, why isn't there an online directory of suppliers, catalogs, or pricing that we can openly and easily refer to? Why? And so, that is what we sought out to build. Made Goodie, a one-stop wholesale marketplace for restaurant owners and chefs. Our value proposition for restaurants is to provide them with a simple, easy-to-use wholesale ordering platform that is competitively and transparently priced, allowing restaurants to easily meet MOQs by combining items across categories. We achieve this by striking commercial partnerships with our suppliers. Digitization in this industry has been slow. The first internet-based POS machine was launched in 1986, and only in the recent years have we really seen a boom thanks to the rise of online food ordering platforms. Now, the same shift is happening in procurement, and companies like Cheetah and Choco are pioneering this space. So just how big is the market? A mid-sized restaurant in Singapore spends about $60,000 a year on average on supplies alone. We have over 5,000 such restaurants that fit our profile. Assuming we capture a 40% market share and serve restaurants 40% of their wholesale supplies, we're looking at $48 million in GMV in one city. Our target is to replicate this across 20 cities, giving us an obtainable market size of about $960 million. Since our beta launch in March as a supplier communications app, we have gone on to quickly test an in-house marketplace, listing beverages directly for sale on the Goodie app. To date, in the last 2 months, we have facilitated over $20,000 worth of orders and sold $3,000 worth of beverages. We are currently in talks with 2 distributors to come on board as our packaging and dry goods supplier to extend our range of internal catalog and wallet share. Our roadmap for the next 18 months is to accelerate acquisition in Singapore while ramping up our supplier partnerships to include more products requested by our customers. Together with that, we will also pilot version 1 of our app in Malaysia and Thailand and start aggregating important restaurant data and building out our network of local distributors and farmers. Our team is made up of Harsh, Ethan, and myself. Harsh is a full-stack developer with a master's from NUS. Ethan is a logistics expert, coming from a family-owned logistics company, having managed a fleet of over 100 vehicles. And finally, myself. I'm experienced in growth and running customer acquisition campaigns, and have been involved at my family-owned restaurant since I was young. We are currently raising our seed round to ramp up product development, building out our in-house catalog for non-perishables, and to launch a pilot into Malaysia and Thailand. I'd like to invite all potential investors and strategic food services partners to join us in building the inevitable future of how restaurants will procure the business supplies. Thank you.
Hi, my name is Audrey from Defiance, and gamified finance is what we are not here to talk about. Yet that's what most of play-to-earn games have been about so far. The focus has been on speculation and the earn side of things, mostly attracting what the gambling world calls bonus hunters. With each release, we're seeing these users migrate from game to game. Churn rates are disastrous, meaning precious resources are wasted on acquisition and player education. There's this assumption in the space that if you have money and no time, free-to-play games are for you. And if you have time and no money, NFT games are the way to go. Projects like Rainmaker, Fraxel, or Revolve Games have been built to serve the 10 million crypto traders instead of the 3 billion gamers out there. Big mistake. Everything we've seen so far tells us it's very doable to convert real gamers, even those that don't have prior experience to crypto. And we know this because this is Web3. Everybody talks. The conclusion, sustainability cannot be reached without spenders. So what's so appealing in Defiance's model? Our North Star metric is progress, not profit. We found a way to minimize the initial commitment for players while focusing on entertainment, which turns players into spenders. We're talking one-click sign-up, exclusive loots, tournaments, and all kinds of appointment mechanics that contribute to players' sense of achievement. Defiance Games is already live and exceeded our expectations, breaking even within the first quarter of activity. We have been growing over 100% month over month and are approaching 2,000 sponsorship applications with a cost of acquisition of $0. We have 25 players in a sandbox environment, but we've been careful not to spend too much as we anticipated the downturn and lack of sustainability of the games that are currently in the market. Players are coming from 61 countries so far, with recent announcement in Switzerland, Germany, California, Panama, and El Salvador had a particularly positive impact on awareness and conversion rates. This position in the industry has made it extremely easy for us to score partnerships very early on, co-designing some aspects of the games, their economy, and their go-to-market strategy. This generates a sense of loyalty and trust across the board, from game studios to players, and even within our own recruitment. We now have 15 team members. Our advisors have strong gaming backgrounds and are all involved in Web3 one way or another. And of course, our extended team includes the blockchain community at large, as I am personally involved in quite a few thought leadership and open source initiatives, and have been since 2016. My co-founder Patrick brings with him 2 decades of experience in AI, data science, and also owns a $25 million crypto fund. We are now actively raising funds to build our MVP and negotiate more partnerships with games releasing within the next 6 to 12 months. We'll be happy to onboard partners that share the same mission, which is to grow the Web3 talent pool, support developers, and grow the size of the market. If you are excited by what you've seen today, we'd love to have you on board as we continue to explore how to make Web3 gaming more sustainable.
So you've probably tried plant-based meat and you found it conceptually interesting. 2 words you might use to describe a Christopher Nolan movie, a friend's face tattoo, or a 15-minute jazz solo. Conceptually interesting is not the words you want to describe the food you eat every day. Over $2 billion has been invested into conceptually interesting ideas that target the future of food. These companies have created replacement proteins, fats, fermented plant-based milk, and grown cell-based meats. The science is incredible. But when consumers go to the supermarket to search for everyday sustainable foods, they don't find the food they love. They either find fake cow meat or the food that cows eat. All of this investment has moved us towards a sustainable future that will only be realized when people find food that they love. Increasingly in Southeast Asia, people identify as meat reducing. But despite over $500 million spent on prepared food each month in Singapore alone, there is no daily option to eat compelling, sustainable food. As Asia rises, food will be a key way people show their status and engagement with the world. Consumers live in big cities and small apartments, driving the demand for convenient food options to become a $40 billion market, where consumers will desire for flavor first and health and nutrition second. Our launch project was to create Singapore's first vegan meal plan, designed to be inherently scalable, asset-light, and really damn tasty. We create minimally processed, nutritionally balanced meals that make eating sustainably a joy. These dishes are chef-made, plant-based, flash-frozen, and then delivered to your doorstep. Consumers purchase directly through our website, where they build their own bundles from a selection of meals from international cuisines like our rigatoni bolognese or chipotle burrito bowl. We deeply believe that there's a better way to make the food we love, and our model shows our ability to take food concepts and bring them to life with low or minimum capex spend. We develop meals in-house, then work with central kitchens and 3PL companies to deliver the food, so we have the time and resources to focus on customer delight. Our founding team, Alex and myself, aren't just foodies, we are food industry professionals. I've spent my career in China working with some of the world's biggest retailers and MNC food brands to do new product development and market launch, and Alex has worked in MNC manufacturing and cloud kitchens across the UK, EU, and Southeast Asia. As a duo, we cover the core commercialization functions needed to scale and run this business. In the 5 months of this year since we set out to create the best-in-market meal plan experience, we have developed and scaled up recipes with manufacturing partners, built a brand, compiled nutritional information, and just this week, we shipped our first orders and are moving towards a target of delighting our first 1,000 customers. At just 250 shipped bundles a week, we will hit an annual recurring revenue of over $1 million. We are on a journey to take the food people love and increasingly demand and give them more sustainable versions of it. Farber today is a D2C meal plan, but Farber food tomorrow will be found in supermarkets, extending beyond our meal plan offering and leveraging the incredible developments in food science to partner with labs and alternate protein companies to make brands people love. And Farber of the future aspires to be the sustainable food brand that makes people love eating green, focusing on core strengths that are, for us, culinary innovation and customer delight. We are building a future where conceptually interesting is the food people love. So, if you want to get involved and you're in Singapore, then order now on the QR code on the screen. And if you're interested in investing, please get in touch. We are looking for people who believe that flavor is the way to make a sustainable food future a reality. Thank you.
Hi, I'm Greg from Shopcat, and I'm going to tell you about a new approach to growing e-commerce brands. The big brands of the past have been created thanks to centralized advertising. New brands trying to reach customers today are facing fragmented audiences and limitless content. This leads to ever-increasing customer acquisition costs and declining ROIs. The problem here is the legacy advertising marketing funnel. It implies that you need to reach customers with advertising 3 to 4 times before you can sell them the product. This might be true for a billboard, but there is absolutely no reason to delay that purchase moment online. At the same time, we see all online platforms are bringing e-commerce checkout closer to their users. With the looming death of third-party cookies and challenges to the ads targeting, and at the same time, with the growth of social selling, it is more and more the audience owners like live streamers, creators, publishers that can bring and explain brands and products to their relevant customers. To allow audience owners to seamlessly become e-commerce resellers, we have built a product API. We allow audience owners to discover products and brands and sell them directly to their audiences and earn commission by doing so. We handle back office operations such as payment and order fulfillment to assure the resellers can focus on presenting the right product to the right audience. First example where we implemented our API is the Good Goods Marketplace, focused on sustainable products. All products here are coming from Shopcat catalog and are fulfilled through our system. Similarly, we can create in seconds marketplace for any niche publisher, such as mom and baby communities, beauty blog, and so on. The second implementations are our creator store, where creators can build their own curated marketplaces. They select products from our catalog and sell them directly to their followers on social media. Here are some of the examples of the creators that we have already on board. Last but not least, we have partnered with AppMesh to bring our brands to the live seller community on their platform. We see very strong traction from the brands, with over 70 brands sign up and 1,500 SKUs in our catalog. What allows us to onboard brands so quickly is the direct Shopify integration, where with minimum effort, brands can add products, set commissions, and also receive the orders to their system. We started building Shopcat in December, with first brands onboarded in March and first reseller integration in April. Right now, we're focused on aggressive reseller recruitment and estimate to generate 11 million GMV this year. Our business model is based on 5% fee on all transactions on our. Singapore is our testing ground, and there is room to grow by expanding to other markets in the region. It is a complex task, but we have a team with a solid experience in building brand businesses, technology solutions, as well as e-commerce platforms. We're looking for investment to accelerate in Singapore, kickstart expansion to 2 other markets. We also want to increase the number of headless platforms we integrate with. We strongly believe that all of the internet touchpoints will be shoppable, and we want to help make that happen. Thank you.
Hi, my name is Adil Rashid and I'm the CEO and co-founder of Snap Retail. We're trying to build the largest grocery retail lending and payment provider platform in Pakistan. In Pakistan, there are about 900,000 grocery retailers, out of which 90% have never used digital payments and 95% are unbanked. We are targeting the top 300,000 of these retailers. When we look at the market size, it is huge. The retail sector in itself is a $170 billion value, out of which grocery retail is $70 billion, and $36 billion is the target market that we are targeting. When we just take a small portion of the transaction of those retailers, the GMV opportunity is north of $17 billion through microloans, digital payments, mobile top-ups, and consumer household payments. What is the problem? The problem is very simple. Currently, our target market is using a pen and paper and manual system to do all their transactions, which means that there is no data to back lending, as well as no platform for giving access to digital payments to them. So we are basically giving a complete retail operating platform that will digitize their core sales functionality. And once that happens, we have quality data to ensure micro-lending, as well as a platform for digital payments in Pakistan. This is something which is happening across the region in India, Middle East, as well as Southeast Asian markets. The great thing about our product is that it has been built with these retailers, which means it's very simple to use, and the results we have on adoption are very, very good. So we are going to target 2 cohorts. The first cohort for the first 2 to 3 years is the top 50,000 retailers, where a larger system with the proper POS is going to be deployed, and the monthly rentals are going to be in the range of $7 to $10. Once this has been done, we move on to the next 250,000 retailers, where the POS system will be replaced by a mobile phone, which will be in the store, and the monthly rentals will go down to $3 to $5. Why should our retailers use this system? It's very simple. This will help them reduce cash losses of up to $100. It will give them quality data for all their purchase decisions. It will save time and also give a lot of consumer credibility through our invoicing. We have built partnerships with premier financial institutions in Pakistan and global. So we have MasterCard on board, Bank Alfala, and as well as Easy Pesa for payments as well as lending partnerships. Our team is a very experienced retail sector team. We have already built a platform. We have already built a startup in Pakistan, which has access to 100,000 top retailers in Pakistan. And hence, that is something which will help us in Snap Retail. Our MVP results have been phenomenal. Our gross transaction value per store has gone up from $322 to $4,500, which is a 15x increase. This means our annualized GTV has gone on just 40 stores to $2 million. Our invoices have gone up to 60,000 from just 40 stores and 15,000 printed invoices. This is north of 1,500 invoices per month per retailer, which is nowhere to be seen in the region in such kind of startup. Our roadmap is very simple. We will basically start targeting and get to 300,000 stores, capturing a GTV of $36 billion. And in terms of fundraising, we have already successfully raised a pre-seed round and are now raising a seed round. And we are backed by top investors like Antler, Zen Capital in Pakistan, CrossFund, and also other angels and investors from across the world. So we are looking forward to connect with you for our next round. Thank you.
Hi, my name is Fateh and I want to tell you about Social Plus. Social Plus companies are the one that builds in-app community engagement as a core strategy of their product. In 2018, News First reported on the rising trends of the social business models in China. It gave examples from social commerce apps like Pinduoduo and Xiaohongshu, which encourages users to come together for group buying and content creation. Now there are several successful Social Plus companies in China. In Southeast Asia, apps have started to bring news feeds to engage buyers and sellers. And it's not limited to e-commerce. Companies across all industries globally are looking to add social features. Darcy from Anderson Horowitz says, the best version of every consumer product is the one that's intrinsically social. And some have started to notice that we are at the beginning of a major consumer trend. But there are challenges building Social Plus apps. 95% of the product owners we spoke to cannot build scalable social features in-house. There are no skills, long time to market, high cost. It's a painful journey to create in-app social experiences. Currently, they lose out on the rich user data and insights as the community engages outside of their platform like Discord, Slack, and WhatsApp. This creates a terrible user experience. These were all the pain points we experienced firsthand in our previous startup building global collaboration platform. It took us 18 months to go from 0 to 1 and a lot of money. There's an API for everything. We only wish there was an API we could actually integrate for social features instead of building them. But there was none. Hence, GetKat was born. Let me introduce you to GetKat. GetKat is a social API infrastructure and data intelligence platform. We make high-quality social features integration easy with fully customizable UI kits and APIs for different industries and use cases, so developers can focus on building their core. Yes, we help developers to easily add pre-built social features with a few lines of code that are easy to integrate, fully modular and scalable, such as news feeds to share content, audio podcasts, and interactive polls to get user insights. You can also create in-app groups and view real-time analytics. Additionally, we have some trending features for phase 2 with group buying experiences, in-app chat, and live streaming commerce, which is a powerful for creators economy, turning any app into a social plus apps in days, increasing engagement and revenue. Now, our GetKat intelligence mashes up user data and product data to personalize feeds, provide offer targeting, and show it on the real-time dashboards. There is no solution out there in the market which meets these customers' expectations. Everything I've shared has been built in a very short span of time. We are very fast, we are lean, and we are resourceful. We have built it ground up. This gives us complete control over the product to scale as we progress. So far, we have been in talks with some of the largest consumer apps across Asia like Foodpanda, Paytm, and more. They all are looking to add social features onto their platform, and most of them are willing to get started with us. Currently, we are integrating with our first 2 pilot customers. 15 in the pipeline, 30 on the waitlist, and a strategic partner with 300 million users into the network. So traditional communication APIs are a proven business model in the US with heavy funding over the last few years. Almost none is focused on social and community yet. And the opportunity is really huge. And we have a big growing market where we are projecting to generate almost 600 million annual recurring revenue in 5 years, with a wide range of verticals to grow and expand into. We also have increased customer demand to build Web3 communities, and we got the complementing in-house expertise for it. With a freemium SaaS business model, we charge based on monthly active users. We are seeking investment to expand our product and engineering team, grow the sales, and expand our customer resources. We can do it together. Our team has a strong background in building tech platform, a proven track record, and a vision to succeed. If you would like to learn more about GetKat and participate in our seed round, please reach out to me and I'll be happy to talk to you. Thank you.
Hi everybody, apa kabar? My name is Richard, CEO and co-founder of Nvio, a full-service digital logistics infrastructure managing the supply chain and distribution for businesses based here in Indonesia. Operating a typical supply chain today usually involves manually coordinating between 5 or more service providers, either with a piece of paper, a lot of emails, or a bunch of WhatsApp group. This is because no company in the world owns the entire supply chain journey. While there are supply chain companies helping businesses coordinate and manage capacity and providers, they almost exclusively target large corporations, either entering a new market or are existing market leaders, with massive day-to-day orders and nationwide coverage. Small or mid-scale companies cannot be priced competitively by these services today because they do not have sufficient demand to fulfill capacity requirements. Nvio was set up for this massively underserved market, representing almost 80% of the total value chain in Indonesia. Managing the supply chain gives Nvio full visibility. This allows us to optimize several key parts of the distribution, from a scalable warehouse and fulfillment center, consolidated shipping, and a network of multimodal transportation, giving access to land, ocean, or air freight capacity. Digitizing the entire process allows us to provide real-time trackability, as well as saving companies money, effectively by converting their fixed overheads into variable costs. The secret to our success is that we've built a massive network of partners across Indonesia. Today, we've partnered with over 70 operators, representing more than 5,000 trucks and 40 warehouses, utilizing Nvio software to track and manage their existing customers and orders, providing better efficiency, visibility, and ultimately improving their day-to-day operation. This ecosystem model allows Nvio to remain asset-light while still being able to guarantee service level and reliability for our customers. Because of our unique value proposition, we've managed to book over $1.2 million revenue in 2021, and we're just getting started. This year, we're on track to 5x this amount, with an annualized revenue of over $5 million and an average 35% month-on-month growth. And our logistics model is winning in over 13,000 shipments, with average over 95% on-time fulfillment rate compared to a mere 75% from our competitors. And unlike our competitors, we also take away the hassle of capacity planning and managing service providers. While there are third-party logistics out there offering services such as trucking or warehousing, but because they do not manage the supply chain, they're simply a middleman providing idle trucks or empty warehouses. Nvio is the only company in this space offering a full-service logistics solution and acting as the coordinating layer, dealing with the complexity across the supply chain. Because of our industry experience, we have first-hand insight on what our customer needs. Nvio was started in 2021 by 2 founders with a passion and combined 20 years experience in logistics. It is not our first time either. I previously founded a logistics startup acquired back in 2019. Our CTO Alif is a full-stack engineer specializing in supply chain ERP. We figured out how to make B2B logistics work, but this is just the beginning. As Indonesia logistics continue to grow rapidly, reaching $275 billion back in 2020, its costs remain one of the highest in the region at 27%, compared to a more efficient country such as Singapore or Malaysia at less than 10%. This is because the entire logistics industry is highly fragmented and built around century-old practices. And we need your help. We are embarking on a journey to redefine the logistics and supply chain for the internet age, uniting the web of logistics to enable trade so that more businesses of all scale can focus on what they do best and let us deal with the rest. Join us as we iterate the digital logistics revolution.
Hello, my name is Brienne Yik, and I am the CEO and co-founder of Carbon5. The carbon global climate crisis is the biggest threat to our home planet today. Governments, companies, and individuals must take action. While ESG funds, or environmental, social, and governance funds, reached $1 trillion in asset value in 2018, the lack of ESG compliance also wiped $500 billion off the market cap for US companies in 2014 to 2019. ESG compliance includes carbon neutrality, or carbon net zero. Eliminating carbon emissions is a critical factor in achieving those goals. As most companies are now required by regulators to take such action, the global carbon offset market is expected to grow to $180 billion by 2030. With $10 billion year-on-year for the Southeast Asian region alone. These numbers are supported by research from Bain & Company and other consulting majors. What companies need today is a seamless, transparent, and cost-effective way to offset their carbon footprint and achieve carbon neutrality. We introduce Carbon5, our blockchain-based solution for businesses and individuals to seamlessly offset their carbon footprint through our carbon offset NFTs that are shown in the slide here. Our carbon offset NFTs are digital twins of carbon assets in the real world, verified by internationally accredited protocols such as Vera, and providing fully transparent audit trails for our users. Our technical solution and go-to-market strategy currently focuses on the blockchain world, allowing users to generate yield and earn carbon offset NFTs with us. Here today, we would like to also introduce to you our real-world mobile app, which will drive the large-scale adoption. The mobile app is dedicated to two sets of users: our business users who need to meet their ESG requirements, and the carbon offset projects from whom we source our carbon offsets from. Users on our platform will be able to meet their carbon net zero goals and generate returns at the same time by buying, offsetting, and earning. Using Carbon5, you're rewarded for doing the right thing. Currently, we have 650 people who form the core of our passionate early adopter community, most likely to use our products once it's launched. We also have a carbon project pipeline of approximately $500,000. Our team has 25 years of relevant combined experience across ESG and blockchain. I bring a background in legal and commodities trading, while our CMO, Florian, who was CMO at Cardano's commercial arm, brings more than 3 years of experience with startups, as well as one exited startup. Our CTO is a full-stack blockchain developer who has been coding for DeFi projects since the beginning of DeFi. Today, we're asking you to connect with us in order to grow our product with corporate partnerships across the SME space and any other potential carbon projects. Come and say hello at Carbon5 and join us on our continued growth, bridging Web3 and sustainability. Thank you for your time.
And that's a wrap to another successful demo day where we get to witness innovation, new ways of doing things, and in the case of these teams, agility and grit like never before. The opportunities to innovate and positively impact the world are bigger than ever, and the leading companies of tomorrow are being built today. If you want to be part of the future and build a company, there is no better time than now. Our next Singapore program starts in September 2022. If you're interested in joining our platform and building your next company with Antler Southeast Asia, apply through our website www.antler.co. We're also always looking for amazing people to join our growing Antler team. You can find out more about our open positions on our website. If you would like to get to know more about Antler, our funds, or partnering with us, get in touch via singapore@antler.co. From all of us in the Antler Southeast Asia team here in Singapore, thank you for watching.